Okay, so here we are, just into Monday morning, a little bit into sort of Asia trade and that so far. Yeah, just a really a sort of firstly assessing sort of impact the sort of Middle East situation is having on markets, and certainly sort of was pretty much as predicted in that sort of risk got a little bit sort of rattled straight off the bat. We saw some sort of big gaps down on the Aussie. We saw sort of equity markets also sort of put in little gaps in that, but they seem to not be fully committing to these downside moves. And I'll flip over to the Aussie in a moment, and you can sort of see that it's really sort of trying to sort of run itself back up, at least in the first couple of hours here. To sort of first target, obviously, with these gaps is obviously close the gap, and then sort of see what the market sort of wants to do from there. But I think the big outstander is sort of gold. So this was a trade with the chart that we were sort of looking at from Friday, and obviously in the weekend wrap up sort of videos. But really, 1830 was the line that I was looking for confirmation, coming off this negative divergence, and also keep sort of repeating. I mean, this sort of a support zone that we've seen previously. So those two things combined, a bit of a sort of wedgy sort of pattern coming here for the bottom as well. Really sort of gave it a great sort of close, and the Middle East sort of situation just seems to have come presumably at the right time for gold longs, at least straight off the bat instead of the start of Asia session. So I think the reason that maybe gold's actually sort of doing a lot better in this sort of situation, as I said, like your DXY, so US dollar, obviously sort of had a bit of a gap as well, but again, that still hasn't sort of committed to that sort of move as of yet. I mean, it's still early days, realistically in the week, and we got some large sort of US data coming out this week with the CPI. But I think sort of like gold's starting to look like it might be a little bit of the sort of the safe haven of choice in this sort of situation. So I think typically in the past, sort of gold seems to have been these sort of the sort of textbook go-to in these kind of sort of situations of conflict and this and that, and certainly oil. Oil was another outstander. I think last I sort of checked, that was up about 4%. So oil loves a good war, and also particularly now there's sort of like talk of Iran sort of being part of the planning of the attack as well. I think that's sort of certainly playing into things, but up 4% at one stage. I haven't sort of had a look right now, sort of where it's at, but that certainly sort of punched off it. But back to sort of gold. You can't see the gap on this one, but for some reason these charts, the Orlando charts, and that just sort of seem to run it all up. So as I said, I always chart things on a couple of uh, different platforms or whatever you want to call them there. But so that's a better sort of representation of the move with gold. And of course, it was like we sort of pointed out on the weekend vid as well. We've also got a bit of this sort of channel, which gold seems to be respecting. Just another confluence of sort of a reason for buyers to sort of step in, which they have done around this zone. And obviously, we're seeing a bit of a sort of push up here. Hasn't really done so much sort of since open. Like really sort of just like you've seen a couple of the sort of standard, okay, yep, people taking profit, which is natural. But since then, you can't really sort of say that it's done much. I mean, I've always sort of been a bit more of the belief, gold doesn't really move much in Asia. I mean, maybe $5 range is about what I expect to sort of see from gold through Asia. Certainly, every now and then you get these sort of bigger moves, but for right now, I mean, look, it spiked, opened, spiked up on that 1856. Okay, yeah, it's back $10, but it's certainly it's just consolidating the zone at the moment. So the longer that it can hold these gains and not just go to immediately take the profit and close that gap, the more likely we are to sort of see a continued sort of push up. And again, I still expect the sort of 1860s, 1875s to be a little bit of a sort of tough zone to sort of get through, as we can see, previous support, previous resistances. So these are parts where, we've got them marked out. This is where the market, for one reason or another, was valuing gold on the move down. So I expect a couple of people, whether long and just trying to get out for even, or whether people are sort of picking these points to take profits. If we can sort of consolidate this zone a little bit more, the next leg I expect to sort of hit into these two resistance levels. If we can get it back above these, well, we've got another story and sort of reassess the situation then. But certainly, it's a great move here. I also had sort of a fairly nice position of gold, sort of 1821 prior to NFP, and sort of despite all things and that, I sort of got stopped out at a couple of them, 1812, which is, I mean, right down here within a buck or two of the lows, which is quite frustrating. Obviously, to sort of see this and then to see it sort of play out, and then obviously this morning sort of gap up. Always a little bit frustrating. I took the last little bit of profit, the sort of ones that didn't get stopped at 1832. So, yeah, it was a bit of a nothingness sort of thing for myself over NFP, but certainly the chart was there, the trade was there, and yeah, sort of see sort of what happens and how long this whole sort of conflict. I mean, like not to sort of get into all that sort of stuff, but they've declared war, so these things aren't going to roll over in a day or two. This is going to go on, and now America's getting involved, and it's going to be scrappy. So, what I mean, there's also potential for a lot more upside moves with gold, and I can definitely see they're sort of pushing, being the catalyst on a fundamental level to push this back up into the 1900s at a bit of time. But the short here and now, these are the levels that I'm looking for to sort of see what we can do. Okay, so across onto Aussie. This is what I was talking about before in terms of risk getting a bit of a rattle, which is what we kind of expected with the weekend wrap. We sort of said, look, it's going to be shaken, which is natural. I mean, the textbook move is okay. Go to safe havens. US dollars the choice of everything in that at the moment. But what we're sort of seeing here is it's gapped down. It's sort of stuffed around here, sort of early sort of trade in that, which doesn't really matter of anything. Little sort of shot down. If you can see it on a lower time frame, it looks a bit better. You can see it really tried to drive down here. Support came down here, broke the lows, came down, a little bit of spike up. Second push to go down, and it's just been bought up, bought up, bought up, bought up, bought up. So gap close is around sort of mid 80s, 63.80s. So I expect there's possibility to push up here and then maybe see a little bit more of a sort of steeper sort of pullback. A little bit of upside here. Certainly if we can get back up and get above this 64 zone, I think that's the sort of play for it all. So all things sort of considered, we're still looking at Aussie in this sort of like as I marked out, consolidation box on the weekly. Obviously this morning sort of gapped down and sort of not looking spectacular for it, but they're buying it back up as of right now. So above 64, I think we're going to sort of bring it back up into this range. Because of course, again, we've got CPI this week, and market prior to all this sort of Middle East stuff happening was starting to sell the US dollar. They're starting to take some profit sort of moving into that. So you know what I mean? Like it may sort of dull any sort of like potential risk downside. If people are going to choose a safe haven, but they're selling the US dollar, you might see, obviously we're seeing gold appreciate a little bit there. You might see the franc sort of appreciate a little bit more. Don't trade, don't even chart that. And also yen. So the yen pairs might start to get a little bit of a sniff as well. But we'll have to sort of wait and see. And certainly for now, they're not sort of immediately committing to these downside moves. And we've probably still got a little bit more upside here. But above 64, I think will be a nice confirmation for Aussie to really go up. And again, that's sort of short-term target to get back up and test this 65 breakout zone. I think it's sort of like, if we get above 64, 65, I think it'll sort of come relatively quickly soon after. So moving across, we've got DXY. Again, sort of these things don't really show the gap so much, do they? So no, so yeah, as I said, if we put this, that's on the 4 hour. Oh no, here we go. Yeah, so we do have the gap here. So the 4 hour didn't show the gap. Lower time frames. As you can see, this is the gap that I was talking about. So market's just gone on open. Let's go US dollar textbook, and they've gone, well, you know what? We were selling this on Friday. Here's just another opportunity to sell it a little bit more. Starting to find a little bit of sort of support at this level at the moment, the 106.20 level. But as I said, sort of like, I'd still expect possibly for at least this gap to close. But you can see that we're starting to see a fairly quick, every time it's pushing up, market's using that. And this was the NFP, using these as very key levels to sort of sell off. So I wouldn't be surprised if we just sort of see a continuation of this overall pullback down here. And I still think, despite everything going on over the weekend and also currently, I think we've probably still got a little bit more profit taking in DXY in the short term. So we'll have to sort of see how this sort of again sort of plays out. We're seeing the new 11:30, so we're just getting a new 30-minute candle here, still pushing down. But yeah, it looks like it's starting to try and find a little bit of support at this level currently. Copper, perfect example here. We got a gap. The gap didn't seem too bad, but certainly even after it opened here, it sort of dropped down a little bit harder. So, you know, put a little sort of short-term support in at the zone. I'll sort of call that for its little downside. I mean, these are just short time frame. This is 30-minute, which for copper is quite low. But of course, you know, all these things are relevant to everything else. And as we can see, it really sort of came off this higher time frame level that we were looking at on Friday morning. So Friday session, we flip onto the daily, really sort of powered on there. And you can see that we've actually flipped this daily here already. So again, if we take out Friday's wick, if we can take out that Friday wick, that opens the door for certainly a little bit more. I'll put that actually just a touch higher, just so we can get above this body, this candle's body, and there. And certainly that's a nice straight shot down. It's certainly, if you match it up with the previous one as well, it's a nice straight up. So I would see some sort of quick move up along here. As I said, that sort of 380 level, this resistance up here, this is where I'm really sort of looking at to sort of try and get above if you're sort of going anything sort of risk. So this level here, obviously it's going to come more over this side here, but this 380 level, if we can't get above that, I think there's definitely this scenario coming down to the 340 is still a valid play. But above sort of 380, I'm going to call this marked out area here a sort of a fake out, and I would expect a continuation move up here to the top side and probably around that sort of 4,000 level. China seems mainly unfazed by what happened over the weekend. There was very minimal sort of movement in terms of gaps or anything like this. So it's just, again, just sort of drifting along. I'm still looking for the downside on this in this right shoulder of the head and shoulders to sort of play out. But again, till we take this out, these lows and these wicks here from, let's say, sort of mid-September, and also start of September, if we can't take out these lows, then we expect probably a little bit of a grind, more of a grind sideways. But certainly if we can get down underneath these wicks, and definitely if we can close down under here, we confirm that, and then you've got the head and shoulders price target for a measured move coming down there as well. Great. So yeah, that's about it from me. Just a quick one this morning. Just sort of catching up on sort of what's happening, updating the charts a little bit, and we'll sort of see how this sort of situation sort of plays out. But certainly at the moment, risk seems to, in the immediate, be sort of shaking things off. Might see a little bit more downside in gold just before we do see further upside. But I certainly think this could be the catalyst, particularly if it persists and hangs on for a bit, to be what could be driving gold back into the 1900s in the coming week or so. Cool. That's about it from me.